Market climbs today's high as stocks rebound on relief over no hawkish surprises from the Reserve Bank of India. Financials, energy and metals lead the recovery while IT and FMCG drag.
The Reserve Bank of India hiked the repo rate by an expected 50 basis points, kept its stance unchanged and retained its inflation guidance for this year. This even as it trimmed its FY23 growth forecast from 7.2 to 7%.
The global economy is indeed in the eye of a new storm.
RBI Governor Shaktikanta Das likened the global monetary tightening to a third storm after COVID and the Ukraine war. He also refused to set an outer limit for the rate hikes while saying that the future actions will be data-driven.
The Competition Commission puts off a decision on the proposed Zee-Sony deal. Sources tell CNBC-TV18 the regulator has called for written submission of information by the two parties.
Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar and with me today is Sonal Bhutra. But after we have digested all the comments really coming in from the RBI and after the rate hike, which was much expected, the market is seeing a huge amount of relief also because there are no negative surprises in what Shaktikanta Das, the RBI governor, really said. So at the moment, taking a look at the markets, the Nifty 50 finally breaks above the 17,000 level, which it had been trying for this particular week. So 1.5% up on that. Sensex is with about close to 900 points gains, and Bank Nifty, that's the one which is leading the charge with 2.5% gain at the moment. And the mid caps have also been resilient, though I would say that a little less tempered approach in terms of gains compared to the key indices. So underperforming, but nothing to complain about, more than 1% gain. And this, remember, after our markets really opened with a negative bias on the flat side today. So it's all good news when we really look at the contribution chart. Reliance Industries is the big boy, but along with that, HDFC Twins, ICICI Bank, Kotak Mahindra Bank and Bajaj Twins are the big supporters of the market today, Sonal.
Oh yes, that's the case because the rate hike has come in line with expectations. So that is something that the market is rejoicing, the first day of the new series. So that's going well for the markets for now. But with that, we'll move on to the top stories that we are tracking. IRDAI is close to approving expenses of management, commission regulations for general insurance companies. Yash is joining in with what he's picking up from sources and what this means. Yash.
Well, Sonal, you know, the point of commission and expenses of management in the insurance sector has been the talking point for quite some time now. There was a draft consultation paper which was released by the insurance regulator, and the latest that we've been given to understand is that there have been rounds of consultation which happened. In fact, the last one happened just day before yesterday when the insurance regulator met general insurance companies, and post that a near final decision has been made on what could be the expenses of management limit for general insurance companies and also the commission limit for general insurance companies. Before I start, what is expenses of management? It's essentially made out of two things. One is the commission which insurance companies can pay to sell their insurance product, and the second one is the operating expenses like salaries which they pay. Now, what we've been given to understand is that IRDAI has nearly fixed the expenses of management limit to 30% of the gross premium collected by general insurance companies, which means if a company collects 100 rupees of premium in a year, the expenses of management, which is commission and operating expenses put together, can only be up to 30 rupees. More flexibility has been given on the commission side, which falls under expenses of management. So the regulator has removed any sort of cap when it comes to commission, but with the condition that it has to remain under the master expenses of management limit of 30%. So your commission can't exceed 30% of the gross premium. Now it's up to insurance companies. If 30% is the limit, or 30 rupees out of 100 rupees is the limit, they can spend 25 rupees on commission, but then they'll only have 5 rupees as other operating expenses. They can reduce commission and increase operating expenses.
Right. So commission has been made more competitive and left to the companies to really decide. Thanks so much, Yash, for all those details. Let's quickly slip into a short breather on Business Lunch now. But when we return, we get you the excerpts from the exclusive conversation with Marico's Harsh Mariwala. Stay tuned for that.
Welcome back. Well, the markets are doing well, but let's talk about a good news. Rural and urban FMCG demand, which was suffering in equal measure as inflation was biting. Now, that's the word coming in from Marico chairman Harsh Mariwala, who, speaking to CNBC-TV18's Jude Sanith, also said that when it comes to price revision, it is the market leaders who will have to take the lead. Let's listen into excerpts from that conversation.
As I see it, it's just not rural, it's urban as well as rural. There may be a marginal difference between urban growth rates and rural growth rates, but the difference is minimal. I think the problem really is inflation. Because if the inflation is high, what happens is at the household level, if they will have to start compromising.
So correct me if I'm wrong, so as far as both urban and rural sectors are concerned in terms of demand itself, you're saying it's equally abysmal on account of inflation?
Rural may be marginally higher, but urban also is not in such a great shape.
Do you see the trend of price hikes that have been quite prevalent, especially in FMCG, actually seeing some cooling off, if inflation does come under control?
Of course, because ultimately FMCG sector has to drive growth. To me, growth is more important. And if I go on taking up prices, I'm forced to take up prices. But if I go on taking up prices, it is going to impact my growth. So I have a trade-off between growth and profits. And to that extent, to some extent, we'll have to ensure that the prices don't go so high that the growth gets impacted.
Absolutely.
Yeah.
Let me stick my neck out and say then, do you also see FMCG companies going so far as to reverse price hikes and cut down on...
There's nothing wrong in reversing price hikes.
But you see it happening?
I think it depends on individual players and depending on the competitive environment in that particular category of products. A lot of it depends on the market leader. So if you are a leader in a category of products and if you reduce prices, automatically all the weaker players or shall I say, they will follow the market leader. If the market leader is not taking up the prices, taking down the prices, then others selectively, some may take down the prices, some may not. So a market leader's behavior also plays a very important role in driving prices down, especially if the raw material prices are cooling off.
But the question remains, sir, do you think market leaders will have the room to actually compromise on margins and go about cutting down on prices?
I think a lot will depend on to what extent have they taken up the prices which during inflation, and were they able to take it up to the same extent or lesser extent. So I don't have data on all that for the sector, but I think if they have been able to take up the prices to cover their margins, then I don't see anything wrong in reducing prices.
All right, so festive demand and demand for FMCG goods, that's to be watched out for. Remember, with inflation, demand destruction is also something which is a macro factor that the economy is trying to deal with. Quick look at the market before we wrap up on the show. And yes, there has been a little bit of more gain on Nifty 50, 267 points gain at the moment. Sensex with 1.67% gain. And Bank Nifty is the one which has really been taking a charge, 2.65% up. Hindalco has been a star performer after a brokerage report gave it a buy rating today. And that is zooming in trade close to 5%. But it is the financials which really are in the spotlight today after the RBI governor's speech. So keep an eye out on the market. With that, it's a wrap from Sonal, me and the entire team of Business Lunch. But keep it here. Midcap Radar is coming up next.